Hello, it's Friday, September 21st, 2007. This is Brian Shannon speaking from Alpha Trends. And the market has closed for the week. The S&P finished with a loss of a penny today. And the market showed a very strong week, obviously. We had the Federal Reserve cut interest rates this week, and that was the catalyst that signaled to people that it was safe to buy stocks again. At least that was the interpretation. The market took out this important level of what had been resistance at 150, and it did so on very heavy volume. In the last couple days, it's been pulling in very grudgingly in here. You can see that on the 10-minute time frame that we didn't make past that little level of resistance I was talking about yesterday, near 152.80 or so, from the last couple days. Nothing to be concerned about, but just something to be aware of. The 5-day moving average continues to rise at a very rapid pace here, and I'm still thinking that it's possible we're going to see this market correct more through time than price. It still holds above that 38.2% retracement, so it's coming in very grudgingly. The daily time frame again is showing what's really looking like maybe a bullish flag setting up. We'll leave the debate about what the Federal Reserve actions from this week mean for the dollar and the inflation and that sort of thing to economists. Meanwhile, let's continue to just focus on price action, and it's clearly still bullish in here. The weekly time frame, again, we made it past that important 150 level, and now it looks like this this whole subprime scare from back here has put a very strong level of support under the market, and that this is looking more like a bear trap. So it doesn't mean the market can't turn around. We always have to be aware of what are the other possibilities, but it's clearly the market made a lot of upside progress this week and continues to act strong in here. So we'll continue to give the benefit of the doubt to the buyers now in this market, as a lot has changed this past week, and it's clearly much stronger than it has been. The semiconductors were, for the third day in a row, where the real stronger action has been. This group has held up better on a relative basis to where the rest of the market had, and it made it past that level I was mentioning yesterday at 38.40 or 38.50, and it pulled back to that late in the day. So it's still not clear that that will be a support level, but this is the inverted head and shoulders I had pointed out yesterday as a possibility. If this 38.50 level, and let's actually give it down to 38.40 or so, but if 38.40 continues to hold early next week, then I think we may be able to see continued upside, and this would measure out to at least about $40 a share on the inverted head and shoulders from this intraday time frame. We've got a rapidly rising 5-day moving average, which is declining, but then you look at the daily time frame, it's still a mess, and it is getting extended in here. So a lot of reasons to still be cautious in the semiconductors, but the picture is clearly improving in there, and hopefully this this level can hold as support, and that'll further strengthen the foundation underneath these semiconductors. The IWM was up 13 cents today. This market did test that 200-day moving average that had been resistance for 5 or 6 weeks in here. Tested that yesterday and held up. Today we had another test, and even for an expiration date, very light volume. So the market continues to hold very strong. We've got a rising 5-day moving average in here. The Fibonacci, if you look at from the Federal Reserve, where we pulled back, we tested the 38.2% retracement yesterday, still holds above that. The 4-day VWAP right now, that's going to give us the average price basically since the Federal Reserve. And you can see we're comfortably above that, and I meant to point that out in the spiders. You can see that's where we are here as well, and there's those Fibonacci levels. And this is the, let me just clear that out. There's the 38.2% retracement and the VWAP from the last 4 days. So the semiconductors, same thing, but the semiconductors again are outperforming right now. And the IWM on a weekly time frame, you look at this, it's made it past this prior level that had been so important to support and then resistance. So as long as it continues to hold above $80 a share, we want to give the benefit of the doubt to the buyers in the IWM. That's this prior level of resistance, the location of the 200-day moving average, and we've got that 5-day moving average coming up to meet price there as well. Finally, we'll look at the NASDAQ 100, and again, they're telling me that these prices are real. I find it hard to believe that anyone paid that, so I'm just going to change the scaling. We did have a new closing high, though. The prior high close was right here on the 19th at $50.32. Today it exceeded that with a close at $50.36. You can see that it was the closing high on a weekly basis as well. So the NASDAQ continues to be the stronger market. It's broken past its important resistance level earlier this week at $49.40. That will continue to be important going forward. However, we are getting a little bit more distance between that level, so you want to place a little bit more importance maybe on the this area right around in here, near about 49.90 or so. We do have a nice slope to this 5-day moving average, and just a little bit of resistance near 50.60, and then it's on to new highs once again. So the market's starting to look a lot better.